I'm thrilled to be here with all of you. So I'll give you some background on myself. I'm a serial entrepreneur. I've done over 30 startups, says 28, but I've done a couple more since then. I need to change that. I've raised over 3.5 billion US dollars on my different ventures, and I'll mention some of them when we talk. And made over 2,000 introductions with companies I've connected with angel investors around the world. I started the world's very first angel investor group back in 1990, Pennsylvania Private Investors Group. I run a major angel capital conference in Philadelphia for the past 20 years. And I've been working with entrepreneurs. I hate to even admit this, but for the past 40 years. So, along with founding the first angel group, I focus on how to help my clients raise money, how to position themselves, understand what the investors are looking for, how to make a pitch that will have a good initial first conversation that will lead to a second meeting, because that's what your presentations initially are with investors. I just met with today 10 different companies that I'm helping with presentations at a angel meeting tomorrow. So I was getting them ready today. And I focus on emphasizing revenue and sales over theory. I don't do any theory when I'm teaching. I've been, along being an entrepreneur, I've been teaching for 24 years. I'll be going to my 25th year. I spent 10 years teaching executive MBAs at the Wharton School. I teach now in Vietnam for the last 3 years at Vietnam's version of Harvard called Vinh University. So there's 15 parts to an investor presentation. And the whole idea in a good investor presentation is anybody can understand what you're talking about. I always tell all my clients that if my mom can't explain it, then I have to keep redoing it until she can explain it to her Mahjong group. So the parts of the investor presentation are: what's the problem and opportunity you're going after? What is your solution and market opportunity? What's the product or service that you're offering? Is there any intellectual property involvement? It's not a must-have like it used to be. One is that if you have intellectual property, unless you have the financial wherewithal to protect it, and also today companies can go rewire anything, and it's hard to go and prove if in fact they have infringed on it. But even if they do, you're years away from a court date, and it could go either way, and it costs a lot of money to get. So intellectual property is somewhat important, but it's not, it doesn't have the same importance it used to have. We look at the target market that you're after, the marketing strategy and tactics you're going to go after, sales strategy, revenue streams, the competition. One thing when I taught at Wharton, I was teaching private equity guys and venture capitalists, is when they put together a plan. I worked in a group that did business plans for foreign companies who want to enter or expand in the market. Most of them never put a client retention plan in. And I would always ask them, so your numbers double every year, but you don't have any numbers in there for what percentage of your customers this year are renewing for next year. And you can't keep doubling if people don't continue to buy the product or service. And it was amazing that rarely, actually nobody in my 10 years ever put that in their plan. What's the management team that you have and their experience, 5-year financial projection, your capital needs and how you use it, and then your exit strategy. So we'll talk about each of these parts of this plan. And one thing I tell my students and my clients is, don't start off with giving them an overview of what they're going to see, because they are going to see whatever you're talking about. Don't waste the slide on that. And remember, you're trying to keep them engaged. So you don't want them to lose focus while they're listening to you. So you don't need slides that say problem and then the next slide tells you what the problem is. Just get directly to it and just give them enough information so they want to have a second conversation with you and bring their experts in to talk more about your company. So this first step you're taking with an investor presentation is like going on a first date. You just want them to get enough information that they feel some chemistry and they want to have a second date. So the problem or opportunity, you want to go and explain to them using 1 to 3 statistics about why there's a problem that needs solving or there's an opportunity there. So clearly, when Steve Jobs was developing the iPod, there wasn't a problem that he was solving. Nobody was really thinking about, I need this. But the opportunity was, hey, if I can get rid of people having to have discs and they can load as many songs as the hard drive will fit and they can take it anywhere and it looks cool, there might be a real opportunity there. And so he would always create products without doing any market research based on his instinct that somebody would like to have this product and looked as an opportunity. A problem, of course, is that, hey, during the pandemic, students still need to be educated. How are we going to go and do that? Most of the video conferencing was meant for big corporations. Then Zoom came along and made it for everybody. And now everybody has Zoom. And of course, Microsoft has opened up Teams that you can do something called Lark, but Zoom is the real big one. So problem, opportunity, and then solution. Just a clear product or service is that, as I mentioned, that my mom can explain it to her Mahjong group. Again, if she can't explain it to them, I got to keep rewriting it until she can easily explain it. Then there's market opportunity. We want to get a few facts in there that show there's a lot of growth in the market that you're going to for this problem or opportunity. And you only need a few facts to get people interested. You don't need to have an overwhelming amount of information to show them there's some promise here. Again, I'll say this often, you're just trying to get to a second meeting with this presentation that will lead to them being so excited that they want to invest. The next thing is a little bit maybe more of a description of your product service. Maybe it's a picture of the app. Maybe it's a picture of the bamboo bicycle that you're now selling. I typically do not always use this slide and just leave it all on the solution. Then if there's any intellectual property you have, you can mention that you've had some patents, trademarks, copyrights, whatever that is. And then you're looking about, hey, this target market that you're looking at, how big is the market? And I know a lot of people talk about the total addressable market, but I don't like to look at that. I like to look at specifically who am I targeting and am I able to get email addresses for either the companies, the right contact person in the company, or if it's consumers, can I buy email addresses of people that are interested in this so I can communicate with them directly? Because if there's 50,000 people in the market for what you're selling, but you can only get 25,000 email addresses and cell phone numbers, then that's your market. It's not the 50,000 because you can't reach those other people or it's hard to reach. And I'm interested in what's the marketing strategy that you're going after. Who is the check writer? Who's the user? Who's the influencer? And then sales strategy, how you're going to convert people to buy it or get other people to resell it for you. Are you going to use internal sales force or are you going to go and get distributors or outsource? How's that going to work? Your revenue streams, how are you going to make money on what you're doing? You don't have to tell me everything about the revenue stream. I just need a 1 sentence description about that revenue stream. And then I want to know about who's the competition. Do you really understand it? And I like seeing, and we'll show you this. I like seeing a spreadsheet that shows the compares across the top and how you're comparing each other. An easy graphic to see, understand, and comprehend. And the management team, I wonder who's on the team and what their experience is because I'm making a big bet on this team, especially in an early stage company. I want to know that the founders are smart enough to surround themselves with experienced, smart, entrepreneurial people, not necessarily people who were in a big corporation. I had a client once that she had two people to choose from to be CEO. One was somebody who grew a company to $30 million in a business that nobody was very familiar with, and another one who was a vice president at Bloomberg selling Bloomberg products. And she goes, "Oh, Mark, this guy from Bloomberg, he's amazing. Look at his sales record. I'm going to choose him." I said, "That's not a good choice because Bloomberg sells itself. All he has to do is show up. This other person sold something no one ever heard of and managed to grow it to 30 million. She still ended up hiring the guy from Bloomberg. Within 2 years, she was out of money and had not moved the business along. The woman she turned down took another position and got that business going to 10 billion in a couple of years. Finally, a 5-year financial projection with revenue, expenses, and profitability. So when you're showing this 5-year projection, um, nobody cares about gross profits. That's a wasted statistic because all you care about at the end of the day as an investor is how much are you selling the product for? And after you pile in all the expenses, how much are you left with? So if you were selling software or you have some kind of app, whatever it is, and you go, our gross profit is 90%. Okay, that sounds great. How much is it after I factor in rent, people, marketing, uh, everything else that does with the business? Oh, I'm down to 15%. Well, that's really all I care about is what that looks like after you factor in all your expenses. And then capital needs. How are you going to use the money to at least get to break even, if not to profitability? And don't bother taking money that isn't enough to get you to break even. And know that whatever you are saying, it's always going to take twice as long and twice as much money, and your profits are going to be half of what you've projected. Because every entrepreneur always believes that they're going to hit these numbers, that everybody's going to fall in love with their product or service. It always takes way longer, even when you know the people, even when they're friends of yours. My best friend, I did a project for, and he goes, "We need this done." And he was the chief medical officer. And from the time we talked about when I gave the original proposal to the time that we actually closed the deal, it was like 6 months. So nothing ever goes according to schedule. And then exit strategy. They just want to know who are the strategic buyers, potential buyers, because they'll pay the most, and who is who are the private equity groups that buy in for this particular type of business, and maybe what potential returns can be. But that's pretty unpredictable. IPO rarely ever happens, especially unless you're doing a really large one where money managers will be buying your stock. But if it's a small cap stock or micro cap stock, it's expensive to run one of those kinds of IPOs. So 10 ways young entrepreneurs can convince investors. And I see across the screen here that you're young, but not quite as young as people who are just out of college or maybe in their early 30s. A lot of you are very experienced professionals yourself. So you want to reframe about what you're doing with your investor, what you're saying to your investor. The first question I actually ask in any pitch that I make is, why did you agree to meet with me? And the reason I say that is because I want to hear what the investors like about it, and I want them on my side, and I want to position my presentation to what interests them. So an early stage, you want to go and talk about all the great potential, what you have, and how yours is truly different, and that you already are gaining some traction. Today, investors are not investing in a earlier seed stage company that doesn't have some revenue. Because they have so many choices of companies to put money into that if a company is looking for $500,000 and has no revenue and is only looking to give up 20% of the company, but another company has revenue and they'll still give up 15, 20% for the same amount of money, they already can trust the one that already has revenue, and that de-risk it. That reduces the chances of losing their money, and that's important to them. Uh, they want to prove the problem. You want to conduct 10 to 30 interviews with your target market. Today, even for an experienced guy like me, and I'm 65, a few years ago, I started a venture based on a problem that I wanted to solve. The company is called Funding Organizer. It was the first common app for commercial loan officers to collect all the information. I created this idea based on my experience of raising bank capital and seeing it took 4 to 8 weeks, and every day they'd ask you a question and for you to give them information about, and then it would take 4 to 8 weeks to collect all of it. None of them had an online application that a commercial loan officer would send you that would also send them time. And so I worked with 10 loan officers to design this. But what I didn't do was ask the people who would have to write me the check, are you interested in me developing this? And it turned out that I spoke to 37 banks and chief lending officers and CEOs of banks, depending on the size. Nobody really cared to reduce that time from 4 to 8 weeks to as little as an hour, but no more than a day. Um, you've got to go and get people to sign up and say they will beta test it with the idea of buying it. If they won't do that, then and you can't find a buyer, there's no use banging your head against the wall. You should move on to something else. And you want to go and build financial models, kind of a bottom up estimates on what things will be. So if you are doing your financial model and you are selling software to coffee shops, you want to be able to go and take a look and say, okay, there's 10,000 coffee shops. I'm going to market to 100 a day. I'm going to take a percentage and figure that X amount of those coffee shops will ask more information about my software. X number are going to ask for a demo, and a certain percentage will buy. So if 30% of the 100, 30 of them say I'd like more information, and then 50% of those say that I'd like a demo, and 50% of those would like to license the software or have a membership. That's what we're looking for, is how did you get to that number? It can't be we're going to get 10% of the market. You have to show, here's how we did it. We sent an email, followed up by a second email, followed by a phone call, followed up by a first meeting, a second meeting, and then a close. Some kind of process that you go through. So you have to go and use simple financial logic to show them how you arrived at your numbers. So 10 ways you can convince investors. Leverage credibility, highlight relevant skills that you have in understanding this market, what's going to make you successful. So when I started prompt payment, I created the concept of reverse factoring. I raised $3.2 billion. I had no background in this. I basically came up with the idea from watching a guy do something similar in Guatemala. I went and recruited the former chief investment officer of BlackRock, who was also the president CEO of American Express Credit Corp. He immediately gave me credibility in the space. He had the right skills to help me scale this up. And so, although I was the CEO and he was the president chief operating officer, Um, I was out there selling this concept to big companies, and he was out there running the operation and scaling it up. Demonstrate execution, show what you've built and how it can be successful. Show them a 30, 60, 90-day plan about what you're planning to do, what your launch plan is going to be, how many people you're going to write to, how you're going to follow up with them, how are you going to make a presentation to help close the sales. um, Focus on a niche that people have not gone after. One of my students, when I taught National University of Singapore, he focused on the metal business for people who are buying metals for manufacturing. And now he has 120 people, and I think it's a $25 million revenue company, all by picking a niche that who would get excited about providing metals to company who use different types of metals for manufacturing processes. But he had been the family who was in that business. He saw an opportunity, wrote a plan for it, got it off the ground with an MVP, showed some traction, investors came in, and now he has a very successful venture. Telling a clear story. I always say that you're like in front of a jury, and you have to go and convince this jury that your man is guilty or innocent. So you have to tell a story that's easy to understand and it's memorable and it's exciting to go and hear. So when I told the story of funding organizer, I would tell people I was working with 5 family-owned businesses, getting between 250,000 and $12 million loans. We went to 15 banks. The banks all gave us a PDF form to go and fill out. And then after we filled it out, they sent us questions every day for 4 to 8 weeks. I thought this was very inefficient, but all the banks were doing it. I thought, what if I could create an efficient online application like the common application that colleges use that everybody can fill out to apply to any college? Wouldn't that save the speed up the time to getting a yes or a no with a loan? And wouldn't it also make it easier for loan officers to juggle more applicants? And so I went out and talked to these folks, and I had a good story to go and tell. And I had interest from investors to come in. I had different venture capital people that saw this, and even banks who said, hey, this would actually be good for our existing loans because all the information you request is things we need them to update on a quarterly basis. But what I did find out, and I should have asked from the beginning, is I should have shown a presentation and said, now that you see what we want to do, are you willing to be a beta tester with the idea of buying? I don't want to waste time building something that you don't want. And so I didn't do that, cost me money. But now I always make sure all the entrepreneurs I deal with actually build a beta version or get people to sign on to test a beta before they go full blown and invest a lot of money and get financial commitments up front from potential buyers. Always be honest about things that you don't know. You should never try to bullshit any investors because they're usually experienced and will see through it, or somebody else will tell them. So it's always best to be honest about whatever questions they ask if you don't have the answers. And if you are not sure, it's better to come back and say, let me circle back to you and come back with the answer. Ask for the right support. When I look at investors, I want an investor who can give me more than a check. I want somebody to be a sounding board, open up doors for us. So here when you're convincing investors, you've got to be thinking about that. Where do you find the investors? You can go to accounting firms and ask about their wealthiest clients or clients that invest, or venture capital firms or family offices. Accountants have that. There are angel groups now all over the world. When I started in 1990, people thought that was insane. That why would somebody wealthy want to risk money at that time on a company with no revenue and give them money? And I said, a lot of people got pretty excited about Microsoft and Apple back in that day. And everybody wants the bragging rights to say, oh, I invested $200,000 and I made 20 million on an investment because I put my money into XYZ company before anybody had ever heard of it. People love to be able to own a lottery ticket and the ticket gets drawn and they're super excited about it. Bankers have lots of clients that could potentially be an investor, and because the bank either would like them to be an investor to support your loan, or you exceeded the loan amount that they could give you based on your credit history or your projections. And so the banker looks at it as if I make an introduction to a client or a firm that I know and they make an investment, it grows, eventually they will need support from a bank and we can get them as a client. Chambers of Commerce know who the people are that like to invest, and so they can be very helpful. Other sources, people forget, go to your college alumni. A lot of students who went to the Wharton School would leverage the alumni of Wharton to get investors because other Wharton grads know who these people are, know what kind of connections they have, know their financial capability of supporting a company, or the alumni know of this person's track record and want to get in before they make a lot of money. So college alumni can be very helpful. In fact, many of the top schools in the United States have alumni angel groups. Almost the entire Ivy League, I think maybe the whole Ivy League has, every one of those schools has at least one angel group, and some of them have multiple angel groups. And there are many angel investors in those groups. And some of the other great schools like Michigan and Penn State and UCLA, all, Louisiana State University, all good ones. If you're out of the country and you look at Cambridge and Oxford and University of Toronto, all good schools with lots of good rich alumni. Family office, corporate VCs. I raise my money mostly through corporate VCs. Prompt payment was that. That's my reverse factoring, my insurance venture, commercial deposit insurance agency, and others I've done. They were great fits for corporate investors. Government funds. Shockingly, the CIA has its own venture fund. Many different departments, including some of the groups in the military, have venture funds that if the technology fits what they're looking for, even if it can be repurposed for other things, they can provide financial support for that. In Vietnam, there's lots of tax benefits where I am. There's money from different family businesses, large corporations, some of it government money from different groups within the government. Investment bankers know wealthy clients that they can make introductions to. Lawyers, especially corporate lawyers and personal investment advisor lawyers, all know folks that they could make introductions to. Others are meetup groups that you can join to let them know that you're interested. Go to the venture capital conferences, go to angel groups, talk to the private equity. If you go to private equity conferences, angel investment networks, all of them can open doors or make introductions for you. 10 steps to raising capital. First of all, you got to prepare. You've got to do your research and developing some research with statistics from valid third-party sources. You would go and do research and talking to customers and ask them if they're truly interested. I often talk to potential customers, I said, don't tell me what you think I want to hear. I want you to tell me if it really is an idea that could be helpful to you. If it's not, it's okay. Because when I started Funding Organizer, bankers I knew, oh my God, it's a great idea. And then when I came to them, they're like, yeah, but we don't really need it. Well, why'd you tell me it was a great idea if you didn't really need it? So I always preface saying, you're not, you don't need me to feel good about it. I just want to know whatever I'm developing, will this be valuable to you? If it is, great. If it isn't, I'm okay with that as well. So then you're looking for access to capital. You can't just apply blindly to an angel group because unless somebody knows you're in that angel group, it goes nowhere. So you have to establish relationships with angel investors in different groups or just angel investors in family offices. So you need to go and leverage all the people I've talked that I mentioned and get them to make introductions. Then you got to build some momentum. Nobody is investing in anything with the exception of biotech and some of these long-term 5, 10 year projects where they're investing knowing that there's no revenue coming for some time. But today there's so many options to invest in that unless you have revenue and can prove that you can have a profitable business, it's next to impossible to actually raise capital. You got to make your case by using third-party statistics and evidence based on you selling your product or service. There's truly a market out there and getting quotes from buyers about what they like about what you do. You have to align your interest with bigger organizations that will help you sell into the market, provide you with financial stability, open doors, provide good mentoring. Step-by-step preparation to close. You have to prepare your foundation, develop your financial model and pitch. You need to access investors that understand what you're doing. You don't want to just take anybody's money. You want to take investor money that understands the market, can open doors for you, and be a good source to provide feedback on what you're doing. You just don't want somebody who invests and is hoping to draw the winning lottery ticket because they often become impatient. So you want to find patient, smart money that can help you grow the business. You want to make your case by delivering a clear, confident pitch, explain the problem, solution, market, and your financial potential. Again, when you're pitching, don't put excess things. Don't give hard to understand descriptions of your product service. All you want to do initially is get them just interested. It's like a first date. You don't want to tell too much. You still want to keep some mystery in there, but enough information that they want to continue to see you. You want to validate the opportunity by talking to real buyers and getting their names, a quote from them, their contact information, maybe an email that they've agreed to go and try and use your product for some period of time. When I raised $3.2 billion for prompt payment, that's exactly what the investors told us we had to do, which was get emails from potential clients who were agreeing to buy our product or service. Then you want to look to formalize the deal. You give them a terms, you negotiate the terms, you make everything simple. What I did when I was negotiating my deals is I would negotiate the initial contract, make it all in easily understood English. The investor would tell me things that they wanted, and then I would ask the lawyer, what things can I absolutely not agree to because I will have regretted it later, or they're going to take advantage of me. Any of the things that I truly have to worry about for the long term. And I would ask the lawyer that. And then if any of those things I had to push back on, I would tell the investor, hey, I'm really sorry, but these are 4 things that are just not negotiable for me, and let me explain why. And it's not like I wasn't open to hear their other side, but I wanted them to know there was a logic behind this. And then they're going to go and do their due diligence. So once they agree to the deal, they're going to say, we agree to this in principle, but now we have to go out and talk to potential clients and ask them what they think about what you're offering. So after they talk to potential clients, they do their own numbers, and then they decide, do we want to go forward and invest in this company? And what's that going to look like? So if they feel like the amount of equity isn't enough, then they'll go somewhere else. If they found that you are inflexible in terms of negotiation, they'll probably go somewhere else. If you're not a good listener to some of the suggestions they've made that are very logical, then they will probably go somewhere else because the investors want somebody that when they're struggling will listen to them, or that they have some ideas that they think can take it to another level and they just want to be helpful and for you to consider that. By the way, when you are closing the deal, um, and your lawyer says everything is good, then there'll be a private placement memorandum, a legal document, and that will tell all the risk involved. So when you're making a presentation, you are definitely not telling people the risk that's involved in investment. That's like going on a date and telling your date all the bad things about you. Now you think, who would ever do something like that? I actually fixed one of my friends up, and she was so happy when the guy walked through the door. She goes, "Oh my God, he's so handsome." When she first met him, he was personable. And first date, he's telling her about all his psychological problems, how he does shrooms and all these things. And she went from really excited to regretting she ever met him. And so if he wanted to get her interest, he could have eased her into, as she got to know him, about some of the issues that he was dealing with. But he started off with providing too much information. What do investors look for? They look for a big growing market. So you might be in a niche, but it's got to be growing. It's got to be something where the company could be worth $1 billion or more. Some investors are happy with a small company, 25, 50 million, that could be brought by private equity. But most people have visions of grandeur and being part of something that they never thought they could ever be involved with. And that is a unicorn company that goes public or gets bought for a lot of money. They want to be in that next WhatsApp where they go and start a company and get bought for like 1,000 times more than the company is worth. WhatsApp was 50 million in revenue, 50 employees, when Facebook bought them for $19 billion. There is no formula that will ever get you to that kind of valuation. Then they want to know there's few competitors. You want competitors because you don't want to have to be the only one spending money to educate the market. So if there's 3 or 4 competitors in there, that's great because you're all sharing in the marketing of the concept, and you're all going to get, if your product is reasonably good and fairly priced, you're all going to get your fair share of the market. But if there are thousands of competitors, well, not so interesting because there's just too many. But if there are no competitor, one competitor, you'll find that you run out of money, which exactly happened to me with my insurance product. Everybody thought it was a great idea, but it took a while to sell, and we ran out of money, and the investors didn't want to put more money in. You have a proprietary technology. It's often nice to have something nobody else has. You have domain expertise. That's very important that you know things about your industry that will allow you to be successful. So domain expertise is really, really important because you also have good business contacts. If you have domain expertise, you've been to conferences, you know people, you've been around. Experienced management. You want to have people who have started something that no one has ever heard of before, and or they are people who are expert in the field that you're in, can open doors, close sales. You have leverage, the ability to use your resources and partnerships and network to get sales and to recruit the right employees.
Yeah, Mark,
Women,
can we summarize and then leave one question space?
yep, okay. Just to summarize everything here, let me just go through um, a couple things on the pitch. One is be concise. Important to know your numbers. I had a client that when the VC asked him to explain his numbers, he turned to me and asked me to explain them, and the VC threw us out of his office. Avoid exaggeration because most investors have been around the block, they're experienced. So just be realistic and honest. Only bring the team members who know what they're talking about. A client that brought a new CFO, they didn't know what they were talking about, and it blew up something that should have been a simple investment. Avoid investors that have no expertise, that they're unethical or they're meddlesome. I had a client that the investor was calling them all the time about how's it doing? How's it doing? When am I going to get a return on my money? You don't want that. You want and you more investors to avoid are ones who are always providing free advice or they want to get in and control things, or they overpromise and underdeliver. I had somebody, client, who kept being told they're going to get $1 million from the investor. They stopped looking to raise money, and the person only invested 200,000. The reality of fundraising, it takes much longer than you would expect. It's really a numbers game. You have to meet a lot of investors, but the right ones. And expect rejections. There's going to be a lot of no's before you hit a yes. And you need people who know people to make introductions for you. You always want to go and you're always selling. And people are going to be doing the due diligence. It's very intense and it takes a lot of time. And you still have to focus on bringing in revenue, or they're either going to walk away or they're going to want your company for a lower valuation. Okay. All right. Let me get off of this, answer any of your questions. What questions does anybody have for me?
No. Can we have one quick question and one quick answer, and we'll start in 9:40 with the next presentation. Jeff, welcome. With just 2 more minutes. Mark, and everybody else, any questions?
I hope that was helpful to you all. I don't see anybody.
Everybody's very excited. They're showing
Oh,
the.
someone has their hand up. His name is Balan Kamichi.
He's actually applauding you,
Oh,
saying
applauding.
great
Okay,
job.
good. All right.
Thank you
Okay,
so much.
so you
This is
have
quite
Mark's
insightful.
information. Go ahead, Balan. Is there a
No,
question?
the others are actually echoing and reflecting on like Mark's insightful session. There are a lot of like insights there, Mark. Thank you so much. I'm going to reflect and connect with you on LinkedIn. Thank you
Excellent.
so
Yeah, please, all of you, please link in with me. That way, if you have any questions, feel free to reach out. If you don't need me anymore, here in Hanoi, it is 20 minutes of 9 p.m. here. So good meeting all of you again. Feel free to reach out to me, and I hope I was helpful to you. As
Thank
always,
you.
great seeing you.